Budget 2023 finally unveiled. 2 years back, the finance minister had very clearly laid out an intention that, like the corporate tax regime, the personal tax regime is going to move to a lower tax rate structure but with minimal exemptions and deductions. 2 years back, there was an optional tax regime introduced for individual taxpayers, but that had not many takers. Today's budget sees a lot of personal tax changes which will provide reprieve to individual taxpayers, but it all depends on which income bracket you are in. The new tax regime has been modified further, the slabs have been tweaked, the rate of 25% has been dropped, the surcharge rate, the top rate of 37% has been dropped to 25%. Therefore, now the peak rate in India under the new regime is lowered from around 42% plus to around 39% plus. Overall, this will leave disposable income more in the hands of individual taxpayers, but it's a function of which income bracket you fall into. Whether to opt for the old regime or the new tax regime is the single most important question in the minds of every individual taxpayer as of today evening, 1st Feb 2023. It's all dependent on your income bracket and the popular deductions of HRA, interest on housing loan that you're used to claiming. Because all that has been taken away from the equation is the standard deduction of 50,000, which is now going to be available under the proposed new regime. Another important change from an individual tax perspective is that income earners up to 7 lakh under the new regime, you will get a rebate, so you will not land up paying any taxes against the existing 5 lakh income limit for rebate under the old tax regime. Then there are certain other important changes for taxation of insurance policies over and above the ULIP policy. So all kinds of endowment policies or any other kind of non-ULIP policies, if the premium is exceeding 5 lakh from 1st April 23 onwards, the finance minister proposes to tax the maturity payouts of such policies as taxable.